And standalone net interest income is seen higher by about 14% at about 2,830 crore rupees. We'll wait by to see what that does. I believe we have an analyst.
Hemendra Hazari is with us on the phone line. Hemendra, hi, afternoon. Just going to highlight and reiterate the numbers for you. The PAR at 2610. We at ET now were working with a poll of 2580, so much in line with estimates. Typically, HDFC is the stable, steady performer.
That's what one normally expects from HDFC. It appears that they have delivered well. Because HDFC Bank, there's been a lot of concern in the financial sector, even from what we have seen from banks like ICICI. But there has been some apprehension on asset quality. So it appears that HDFC has, maintained the analyst forecast and has lived up to expectations.
NII as well has come in, and that's come in at 2,821 crore rupees versus a comparable of 2,640. We at ET now were working with a sum total of 2,830 in terms of the NII. So just optically going by the numbers, both in terms of PAT as well as the NII, Poonam, this looks like an inline set. But let's go across to our earnings desk and get into the nitty-gritties. Poonam, do all the numbers and parameters stack up to your expectations?
Of course, do have the net interest income as well as the profits pretty much in line with the estimates. If you look at the provisions itself, we also have the provisions right now. We have the provisions coming in at 545 crore, which is a versus of 50 crore in the same quarter last year, and a versus of 68 crore on a sequential basis. So yes, of course, there is a jump in terms of the provisions, but this is pretty much on the expected lines because management, of course, had disclosed that they would be making additional one-time provision to the extent of 450 crore on account of unforeseen future losses, and all these provisions of nearly around 450 crore the management had disclosed would be towards the standard assets. So pretty much the provisions are pretty much in line. The net interest income is also in line and the profits are also in line. I just have one more question to Mr. Hemendra Hazari before I could just highlight a few other numbers. Mr. Hazari, what do you make in terms of the net interest income growth? Because the net interest income growth on the face of it is of course growing nearly around 14 to 15% Do you think that this is a strong enough growth coming in terms of especially the net interest income for HDFC Limited?
See, one thing it also has to be borne in mind is that the profit has got a boost from the profit on sale of investments. Now, even though the net interest income may be slightly below expectations, I think one must keep in mind that there is an economic slowdown. And even mortgages, the growth will have to get impacted. And therefore, I think you're probably seeing a slight, the net interest income may not be slightly lower than the analyst expectation.
Ravikant, we also have some of the details here wherein we were expecting a high amount. Sorry, Mr. Mayuresh Joshi, we also have some of the details here wherein we were expecting a very high profit on sale of investment coming into this quarter. And this is, of course, in terms coming in on the back of stake sale in the life insurance business. What do you make of this? Because we have the profit on sale of investments to the extent of 15-20 crore during the quarter. This again is on expected lines as per the disclosures, and this is towards the stake sale in the life insurance business. So if we actually strip off this entire profit itself during this quarter, your profit growth would not have been as high as 2607 crore during this quarter. What do you make of this?
My belief is that the numbers are largely in line with what I and the street were estimating. So what needs to be looked out for is how the growth in the loan book is expected to grow by the management. If that remains moderate, specifically on the individual loan segment, because of the hyper competition that we're witnessing at this point of time through a lot of BHFCs having a huge amount of competitiveness in terms of the loan book. My own take is that the NIMs probably will keep on contracting, and the primary reason for that will be the softening interest rate, and that will keep the NIMs under pressure. So I think the loan book expectations is largely 14-15%, and we are largely expecting the NII to grow at 11-11.5% over the next couple of years.
Right. So just in terms of the loan book, again, Mayuresh, loan book, of course, is expected to grow nearly 12 to 14%. Do you again expect a similar kind of loan book growth? Would that even entice you looking at the valuations at which HDFC Limited is trading? If at all the management commentary does happen that the loan book growth net of loans sold is only going to be again around the 12 to 14% mark, do you think that that is the kind of loan growth that you would be looking at, or would a higher loan growth really entice you in terms of upping the target price coming in for HDFC Limited then?
I mean, again, Poonam, if the management does give a higher than expected trajectory in terms of loan growth, that would be taken a little bit positively. But one must understand that the skewness in terms of how the corporate book is going, I think that is going extremely softly for the bank. The growth in the high-yielding corporate loans, as I said, remains subdued. The retail loan continues to grow at a very healthy pace. But again, as I mentioned earlier, if it's 12 to 14%, I think that's largely priced in. You're looking at a huge base for HDFC for the past so many quarters. And again, with the kind of expectations that one really has in terms of valuations have always traded at a premium in terms of how the market comparisons were. So largely, I think if it's 13, 14%, I think that is largely gestated by the street. And as I said, I think there is hyper competition around, even though the asset quality is stable. My own take is that the NIMs will remain soft, at least for the next few quarters, because interest rates softening will keep the yields and NIMs in check.
Right, Mr. Hazari, this question is coming into you. I do not really have the gross NPAs and net NPAs figure as of now, but more or less, again, these are likely to be pretty much on the expected lines because that is what the trend has been so far. I don't have the numbers right now in front of me, but the last quarter GNPAs did stand at 0.72%. Do you think that this kind of asset quality trend, assuming again we do see stable gross NPAs when we would be listing the management, do you think that this kind of a trend, if at all, would be still sustainable for HDFC Limited?
HDFC is a very large player in the market, apart from being probably the oldest player. And therefore, given how the market is shaping up, I would expect that the NPAs should slowly start creeping up in the future. Because even mortgages, as I think everybody knows, there's a lot of huge inventory in the major metros. And I don't see that coming down. So I think one should expect that given the slow movement in real estate, that NPAs will creep up even for HDFC.
Right. Also, Mayuresh, I just have one more question to you here. We are also expecting management commentary on the listing of the insurance business. In terms of your ballpark calculations, what is the value that you would assign to the insurance business in terms of their as compared to the per share value to the insurance business versus the total versus where HDFC Limited stock is trading? What is the value that you would assign there, and what is the kind of valuations that you expect the insurance business itself to list in as and when, of course, when it does happen?
The insurance piece is doing very well for HDFC, Poonam, and if one takes into account the prior deals which have happened in terms of the earlier stakes that have happened, and not the listing part. Again, I think one expects a reasonable amount of valuation to come through. But again, I think there are a lot of ifs and buts happening on this front. What kind of solvency ratios are we looking at the end of this year? What kind of contingency ratios are we looking at? What is the cost to expenses ratio that the life insurance arm is reporting? I think one really needs to have that when one does the embedded value calculations. But I think I'm expecting a healthy number probably to come through. But I think we'll wait for the management to probably give us that.
Okay. Mr. Hazari, you were also speaking about in terms of the asset quality there. You were speaking about the property prices and the higher inventory levels that we are already seeing in the country, especially in cities like Bombay. But overall, if you look at HDFC Limited, we do see that their presence is spread across the country, and hence as a result of that, do you think that the kind of growth that we are seeing is still likely to sustain for HDFC Limited? The long-term growth I'm speaking about a growth for home finance over a period of 5 years at least.
What is happening today is because of the extreme stress in corporates, we are finding most banks are now focusing on retail, and therefore the bulk of it is mortgages. So when there's such a high concentration, every bank is focusing on that. And yet, in my opinion, the mortgage market is not going to grow spectacularly because of the oversupply that you see in the major metros. Therefore, it stands to reason that a large player like HDFC, I would see that its growth would be decelerating, because if they are to push that growth and they have such a large base, they will be running into asset quality problems. So therefore, in my view, seeing that HDFC historically has been a very conservative player, I see that the growth of the overall book decelerating in the future.
So we've analyzed the numbers of HDFC. Hemendra, thank you so much for joining in, as well as Poonam for breaking down the numbers for us, and Mayuresh as well. But let's focus in on Marico. So Gupta